And coming to you, Hans, so in this new world, right? I mean, I remember in kind of the SaaS era, one of the key metrics that everyone thought about, including investors, acquirers, was ARR, right? So you kind of centered your thinking on the growth of ARR, what's the quantum, ACVs, churn, and all those kind of metrics. Now, in this day and age, and I know both of you are spending a lot of time with all the corp dev departments at the Cisco's of the world and the HubSpots of the world, what are the M&A acquirers looking for today in terms of potential acquisitions?
Yeah, they're going to be, I mean, pretty much what most people know. There's usually a handful of things that they look at, and it all depends. I mean, we're in a bullish market, bearish market, the verticals that we're in. But the handful of things that they look for, of course, initially is there a strategic fit? Are there synergies between the acquiring company and the acquired company, right? Does it help in the market expansion of the company? Is there an easy product integration between the two? And then is there customer overlap, right? So those those three that come to mind are basically around the first and foremost, let's make sure that there's an actual fit before we even start the conversation. Once you get into that, then of course you're going to look at the financials, right? Always important. It's important to look at, as you mentioned, the ARR, the general growth of the company. I think there are some pitfalls that happen where you're looking at revenue over profit. It's really important to make sure that profit is part of the conversation, not just revenue. And if the company is not necessarily profitable, is there a path to profitability? And what that looks like, and does that make sense from a general sense around the strategic operations of the company that match the acquiring company? Because as it gets absorbed, same operations are going to happen, in hopefully in both sides. And then what's the overall like retention metrics and expansion metrics, the NRR, like are those healthy? Does the math make sense? Always look at the math, and then that way you can kind of really truly see through the due diligence process how healthy that is. The other thing is technology and IP. Does the technology match what you're trying to absorb into your own platform? Is there strong enough IP? Sometimes IP, there's a shelf life of IP. So does that enhance or advance or increase the shelf life of current IP? I remember one company I worked for, one of the first companies I worked for was like a secondary market for non-core intellectual property, where there's a shelf life to most IP. The non-core IP can be sold or can be leased out. So one of the examples we used to do was IBM enhanced their or boosted their bottom line by $1 billion back in the day. This was a long time ago when I had hair. Um, and and so that's a real thing. So when you're acquiring a company, IP still matters. Um, and then competitive positioning. Are you getting into a new market? Uh, is it better to acquire a company within this new market than building it your own or slowly penetrating a new market? It's really important to understand that uh, this company that you're acquiring, how well are they positioned within that market? Are they loved by their customers? Are they a market leader? Are they, second in command of that market? Is part of that acquisition going to boost you beyond that? And then, to round it up, I would say the founders, the current talent within the company, they're going to be absorbed into the company. You want to make sure there's somewhat of a cultural fit, but also a very strong team. And so it's kind of a double whammy. You're getting the product, you're getting the market, and you're getting some pretty awesome people along the way. That's a huge thing for companies to look for. And I guess the last thing would be kind of regulatory stuff. Is that Are we in compliant? Do we need to be in compliance with something? Do we need to acquire a company to do that? Is there, risk assessment, all of that? That could also be part of why companies acquire other companies. And I would say that's kind of a general handful of things that people look at while they're thinking about acquiring a certain company. I'm sure there are more, but those are the basics.
If you look at specific acquirers, and I know that both of you spend a lot of time with the large big tech companies, right? And especially on the enterprise side, and Madhu, feel free to chime in on this as well. Do you see their corp dev departments when they're kind of talking to you about, hey, this is kind of our acquisition strategy. This is the kind of companies we're looking for. This is how we are kind of doing a market landscape or mapping the market out and filtering targets. Are there certain kind of common themes emerging from a lot of these corporate departments, or are you actually seeing everyone kind of having very different stances, especially given AI and what kind of their respective competitive positions are and how their particular verticals or markets are? Um,
Yeah.
yeah,
I mean, there's always like, is there a strong AI play in this particular thing? Can there
yeah,
be a strong AI play? Can it help boost profitability? Profitability is a big one, right? So as much as revenue is important, I think a Snowflake was used as an example not too long ago with Warren Buffett around their profitability compared to their overall revenue. So the profitability is another big question, and they definitely double click on that, and they make sure that the delta there makes sense for a possible acquisition. Um, and then it's the team, right? I think, sometimes we downplay that because we have enough of our people involved in this. We don't really need anyone else. But if you really do it right and you absorb the right team within that acquisition, the growth potential, and I think rejuvenating the founding team into doing what they've always wanted to do that they may have strayed away comes back in that moment, and then they're able to kind of double down on now with new resources to really increase the multipliers. So that's another point that I kind of just want to make in terms of some of the conversations. Like, so who's running this? Who's behind this? And if really, if we instill more life in this company, are they going to be able to go back to doing what they wanted to do? And how far away? And why didn't they come to that level of growth that they wanted to? That this level of capital infusion makes sense this time around. So those questions definitely come around during these processes.
Absolutely. The team thing, I will say, to add to what Hans said, the team dynamic is probably safe to assume that is a common theme across any acquirer, right? Very rarely do you find, and it's not never, very rarely do you find acquisitions driven by technology alone or market presence alone in the absence of any focus on team, because that's the team that brought the company there. So if the team isn't the right fit, then you are taking a huge risk in buying, even if it's awesome technology, if you ignore red flags about the team. To give you an example, Hans and I have experience with a company in the past, without naming names, we'll say there was a large, multi-billion dollar company looking at acquiring one of the companies we were at early on. And they were looking at another company as well, similar to us, but slightly bigger. And that company probably would have costed this company 800 million. And they ended up choosing, they were ready to go forward with it. It's a much bigger, well-established player. It'll be, good. But the founding, the CEO or the founder didn't register that well with the buyers who cared a lot about team. And then at the last minute, they're like, you know what, we're going to go with this other company. We like the founder. Yes, they're a little bit smaller. They still have some more things to prove, but I love the founder. So we're going to go with that. Right? That's crazy to walk away from a fit and then take on a company just because they like the CEO better. So that's one point. And in terms of themes, I will also say that usually it's rare for M&A teams alone to initiate acquisition idea. It's usually coming from a product owner or a business owner in the company saying, I like this company because I run the P&L for this department, or I run the product for this department, and those guys are doing something interesting. And that becomes the driver, and then the M&A team becomes the kind of execution expert, leading off of an internal request coming from the product team. It's rare for the M&A team to say, I have an interesting company. I'm going to go talk to them, and then I'm going to pitch this company into the buyer internally, into my sponsor who will like it, right? It's not never, but it's oftentimes the product. So a good tip I would propose is if you find yourself working in close relationships with a business unit, then you have a much stronger chance at acquisition because the business unit's going to say, hey, guys, we should really look at M&A for this company. So that's another theme, right? And then if it's on the private equity side, I know we'll talk about this later on, I'm sure. Private equity firms look for slightly different things. Maybe there's a slight, not to say that they won't emphasize team, they will too, but they're a little bit more mathematical because they have a playbook. They have an aggressive kind of buy the company, split it up for parts, and integrate it into my other broader portfolio play. So that is valuable. But if you're looking at a traditional company acquisition process, think of the product owner, think of the business owner, try to build a relationship there. M&A teams oftentimes tend to be supporting the execution, and then they definitely look at all the flags or all the drivers that Hans mentioned.